Welcome to the Tradier Rundown. I am Jim Urio. That's Bob Iacchino. We, the two of us, are the hosts of Tradier's The Trader's Edge that airs live on Wednesdays at 3 p.m. Chicago time, 4 p.m. Eastern time. Robert, how are you?
I'm good, Jimmy. How are you?
Good. First of all, we're going to talk about metals here, but just a quick thing. Were you shocked about the risk-on rally today, particularly in stocks?
I'll tell you what I noticed about the risk-on rally today was the third session of declining volume. Now, I don't think volume is a precise indicator at all. As a matter of fact, I take long trades with low volume. I take short trades with low volume, but it's the third consecutive session. We had 3 rising or higher closes in equities, and we have 3 days of declining volume. So for those of you that use that as a confirmation, you don't have it.
You don't have it, right? Okay, let's talk about precious metals. Yesterday, the metals complex got hammered. Copper seems logical to me. It got to a price that was so elevated that I think people in China stopped buying it. Gold and silver were less clear to me. Position squaring, what do you think?
Yeah, there was position squaring because, you know, it wasn't until today that we got priced in 2 rate cuts in 2024 again. I think the probability now for a September rate cut's about 56 or 57%. And for December, it's upwards of like 40%, which is the highest of the possible things in terms of probability percentages, but still not high. I mean, 40%, it's not even a 50% probability. I did that math in my head. You impressed by that?
Well done.
Yeah. So I think
2 more years, you won't be able to do that. But
I think it was position squaring more than anything. And, you know, we got a little rally in gold today as well, over 1%.
Yeah, I saw, and I thought the rally today was nice. It was an engulfing candle. Any strength tomorrow, I think maybe that was just a run-of-the-mill pullback. Okay, 10-year yields have gone from 4.63 back on the 30th to below 4.3 today. I would have thought metals would have screamed higher than that. They didn't. So you're saying position squaring, but the fundamental story is still pretty positive for gold and silver, correct?
It is. I mean, it's also 4 consecutive sessions of U.S. Treasury yields falling across the curve from the 2-year out to the 30-year. So not only is the rate cut probability grinding higher, but yields are grinding lower. All of this is supportive for gold and silver. So, you know, that pullback, that's another reason why I think it's position squaring. But there's an interesting thing about gold going on right now. People can learn a lot from correlations, right? And we don't talk about it a lot because we don't trade correlations. I know I don't, and I'm pretty sure you don't either. I've always said that, you know, let's say oil is correlated to the dollar, but you know what's 100% correlated to oil is oil. So if you have an opinion, why trade something that's correlated? Trade the thing that you have an opinion on. But gold has had an important shift. So gold historically has a strong positive correlation to the Swiss franc, which makes sense, right? It's upwards of 90% historically. But over the last, let's just call it this rally, gold and the Swiss franc inversely were correlated. It was negative 90%, which goes from positive 90% to negative 90%. Over the last 30 days, it's gone back to positive 8. So
that's interesting. What's it telling you?
Well, does that mean that we're now not only rallying gold because we think that the Fed's going to cut rates, but because there's risk? Because the Swiss franc is a risk asset, right? Nice. When we see risk coming, we go into the Swiss franc and the yen, and to a certain degree, the dollar and gold. Before that, it was inflation with no reactive Fed, and the Swiss was not reacting to that. The Swiss is now moving along with gold at a +8. +8 is basically non-correlated, but it's a big shift.
Wow. You know, I'll constantly remind myself that I'm smarter than you, but answers like that make it harder to do. Because that was
I just want to make it as hard for you as possible.
It's still going to be my narrative, of course, but it's just harder and harder to do. Real quickly, the best ways to hold gold for short, medium, and long term.
I mean, to me, it's always the future, but you got GLD and the ETF. It's IAU is a good one, and BAR are all physical gold ETFs. Silver, SLV, for example, the Sprott silver is pretty good as well. Then you got platinum and palladium. They have their own ETFs as well, if that's what interests you in the precious metal side.
Cool. This is Tradier's Rundown. I'm Jim Urio. That's Bob Iacchino. If you like this, which of course you like this, tune into Tradier's The Trader's Edge, 3 o'clock Chicago time, 4 o'clock Eastern time, Wednesday. See you there.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc., all rights reserved, member FINRA SIPC.